Welcome back to another edition of the Chart Pack series. This is a bonus series that is accessible on our site. You can view the podcast as you're probably listening to right now, but to access the content used in this video, head on over to quantiumresearch.co.uk and log in if you haven't already signed up. All you need to do is go over to the sign up section. You don't have to tick for updates, but make sure that you're able to log in so you can access the chart pack. And today's episode is for episode 9, the 13th of August 2019. For those who would like to head on over to the site, take a quick pause now as I go to take a sip of my super malt, hands down the best drink in existence. Alright, so beginning with section 1, we're going to be looking at the charts of John Menzies, ticker symbol MNZS. Menzies kind of spells it there. We are going to be looking at chart 1.1, where we can see the two moving averages that we're using, the 20 simple moving average and the 50 simple moving average. They're both moving down. The 20 simple moving average is around 450, 460. The 50 simple moving average is around 500 pence per share. So these levels would likely act as resistance. We are paying close attention here to the previous low that actually occurred a couple of weeks or so ago at around 360 pence per share. This chart is a look at the weekly, so actually not a couple of weeks ago, probably a month and a half odd ago, and as we are looking at the weekly, we are trying to get a broader view because this stock is very illiquid and it doesn't really move that much, because as I've used this weekly chart, it still shows a really tight range. So with this kind of stock, we have to look at the general trend to distinguish whether we are going to execute a long position or execute a short position, or just have a neutral base and look for, say, a chop to break out or whatever. Because at this current situation, the MACD oscillator that is right at the bottom of the chart shows bearishness, at least in my opinion. As we used the three green arrows, the final two arrows, the second and the third green arrow show a rise in the price, and that was signaled before by a turn in the MACD oscillator. So there was a bullish signal before the rise had occurred. One would look to go long as that bullish signal had occurred and then hold their shares with somewhat of a wide stop loss, probably a previous support level, which we could say is around 470 odd pence per share. So say you'd go long at 520, you would have exited around 560, and yes, your stop would be larger or wider than your reward, but it is based off a higher conviction. This isn't really a situation you'd look to trade. In fact, I would just monitor this kind of position because yes, on the weekly it is in a downtrend, but if the price were to break a 50 moving average, then you'd look for much higher targets. In fact, those green arrows shown, the final green arrow shows a resistance at about 560. So if the 50 MA at say 500 odd breaks, you have about 12.5%, 12% or so of reward, and you could just put your stop at just below the 50 MA dependent on the spread, because this kind of stock does probably have a spread of about 1 to 2%. So you must keep that in mind, because if you get stopped out immediately after buying for having such a tight stop loss, it is your fault. And you don't want to be losing money instantly, buying into a position and putting your stop above where the bid is. I've noted in the chart pack that you must note that the 50 moving average is decreasing, so your positioning should reflect the level at the time of opening your position. So say in a month's time, so 4 weeks worth of data later, the 50 MA is 480 pence per share, then you must use that as your 50 MA level of resistance. But right now, the spread between the 20 and the 50 MA is so small, I wouldn't really look to go long on a break of 20 MA, because the spread would really wipe away the majority of your reward, and your stop would be around 360, which is unrealistic, having like a 3 times risk than your potential reward. It's very unrealistic, in fact, in my opinion. But we must note on the weekly that there is still bearishness in a downtrend. So at the moment, you wouldn't really look to open a long position. If you really can use the fundamentals of this company in a bearish way, and you believe that they won't hold that support around 360, say, or this Brexit drama or geopolitical tensions or whatever could hit their trade volume so hard that the work they're doing, obviously with aviation, as we mentioned in this morning's podcast, may make a huge loss or fail to make a profit. Obviously, we mentioned this morning that they had a loss on their statement for the first half, I believe, but they did make a profit in the previous half. So it could be a seasonal business, who knows. At the moment, trading conditions have definitely worsened. The price is down a couple of percent for the day. So moving on to the monthly look, as we've got a lot more data and larger ranges on the monthly, this is quite helpful of a chart at least. So we're talking about chart 1.2, the 20 moving average, 20 simple moving average is moving underneath the 50 MA. That usually shows a lot of bearish movement, or at least signals bearish movement ahead, because you'd look for the price to kind of, yes, be choppy between, say, the 380 to 500 range, but as the MAs drop, more specifically the 20 MA, as the prices have been lower in the past 20 days in comparison to the past 50 days on average, we'd look to use that as a level to short. Say if you were trying to trade this stock, every test of the 20 MA, just short and close at, say, the bottom of the green trend channel line shown by the final arrow in line with the year 2020, which obviously shows quite a long-term position. You wouldn't really look to call this a trade. This is more so an investment, so there should be more conviction on your position. At the moment, the MACD oscillator is also quite bearish, and there is quite a long way left to go. And if this green support line at around 380 pence per share fails to hold, you'd look to previous support levels at around 270 odd. However, we must also look at the bullish situation. If this share were to completely reverse, say the MACD oscillator turns positive, and the price were to break above the 20 and the 50 moving averages, regardless of which one's on top of the other, at the moment it looks likely that the 20-day moving average will be lower before the 20 simple moving average for the monthly will likely be lower than the 50 simple moving average. And that will probably start to turn down later and probably walk down the trend with it. But if the price were to break above there and hold and likely consolidate, then you'd look to these upward targets that are labeled in the chart back, these resistance levels that are really important, of around 580 and 750 pence per share. Okay, time for another sip of that super malt. Now moving on to section 2, we're going to be looking at plus 500. Ticker symbol PLUS, otherwise known as the word plus. This company, in chart 2.1, we're looking at a daily look. And each candlestick, once again, as we've mentioned in previous episodes, represents one trading day. So we can see that today the price is effectively broken out of a consolidation period, and it's popped by about 20% from in fact 20%, 15 to 20%, that's been the pop. We've labeled important levels of resistance in the past. One that I've kind of flagged up is 779 or thereabouts, plus or minus 10 points. That area has been a difficult level of resistance, or at least has been a level of consolidation on the downside, and then the price actually had broken down due to a disappointing news flow. In fact, fundamental news had been weaker than expected, so sentiment had dragged the price down, and the technicals kind of followed through with it. So we've mentioned that the 20 MA is the orange line. That's 20-day moving average in this case. It's moving down. So, well, it had been moving down back in, I think, April the 15th, around. On the left side of the chart, we can see that the price had broken down and it kind of created a gap. And at the moment, it seems that the price has almost, if not already, filled that gap created. a large gap on the chart where I've kind of labeled 20 MA. On the left of it, you've got a really large gap. And that could have been a potential long setup from the point where, say, the price consolidated at this green trend channel support line. That is an increasing level of support. We've mentioned on the graph increasing support from bottom green trend channel line. The MACD isn't really showing a clear indication, but at the moment it has turned positive. I've also shown that the top of the historical green trend channel line goes to approximately 815, but once again, that's 815 pence per share at the moment. You should follow through. It will likely be decreasing. At the moment, I think it's actually 820, but it's decreasing by a couple of pence every week or so. So at the moment, the setup does look bullish, but this spike has a setup for, say, a potential buy on a dip. At the moment, you would likely be spiked if you did buy it, because we'll be looking at a tighter time frame in a second. That's a 4-hour time frame, I believe, in chart 2.2, and we'll be looking at the deeper levels of support with regards to the 20 and 50 simple moving averages. But I think one thing that probably doesn't constitute the opening of a trade at the moment, a long, say, or even a short, is the fact that yes, it has broken out, but this is a volume spike. So as you look for volume to consolidate, traders will probably take profits, and those who genuinely believe that the trend is reversing for this stock and there is sufficient upside will look to buy on the dips. And those who have already been holding before this news, as I mentioned, will be selling off a little bit likely. The news was all right. It was definitely better than expected. As I mentioned, it was quite a bad report, but individuals didn't expect the company to turn a profit. Yes, their profit had dropped significantly, but the fact that they still made about 50 million odd in profit, that's impressive. And I think the market had taken that well. And also select a few other details that are important when you're valuing a broker. One healthy chart pattern, at least ever since this drop had occurred back in around the April-May period, is once again I've mentioned, the increasing level of support. We had a support back in July at around 500 pence per share, and then the price had rebounded to around 650. It had recently dropped to something like 580 odd pence per share. Today, the price had peaked at around 700 pence per share. So there is upside, as I mentioned, with the resistance on the daily look at around 780, but you look to probably analyze a tighter time frame first before you open your position. And we're going to look at that right now. In fact, I'm going to keep on the same breath. Chart 2.2 shows a 4-hourly look at plus 500. And this company is establishing a support, or at least looks to establish a support, at around the 50 MA, which is about 622.7 right now, but it is beginning to turn up. So you'd look to tighter time frames, and if you have a lot of conviction in the stock, then you look to use, say, an hourly time frame and evaluate what the 50 MA is at and whether it constitutes a position for you to open. You don't buy exactly on the support, you buy a little bit above, and you have your stop a little bit below, so that you don't get stopped out trying to catch the trend reversal. And say if the price comes back down and you get stopped out, you've only taken a couple of percentage loss. You could literally put your stop, say, on a 625 entry at 616, risk about almost 2%, which isn't that much. And your potential reward is up to either the 779 resistance we mentioned from earlier or the 815 level of resistance, which gives you a lot more reward to the risk you're taking. The only downside is the price fails to hold that support at around, say, wherever the 50 MA is, or you might likely be using the 20 MA, the orange line, as a level of support. If it fails to hold, then you rinse and repeat on a break or a consolidation to increase the likelihood of you catching this trend reversal. We can see that the MACD oscillator is positive, and there isn't really anything more to take from this chart. I mean, there is a nice setup of now higher highs and higher lows, but this is a tighter time frame, because if we go back to chart 1, it's more so lower highs and higher lows, which doesn't really suggest anything at the moment. But it's maybe a situation where if the price fails to hold the level of supports mentioned earlier, but more specifically the bottom green trend channel line, which is at around 580 to 600 pence, if it fails to hold there, it will likely break down and you'll probably see lower lows than the April to May period lows achieved at around, 480 pence per share. But all of this is contingent on the price action ahead. So these are possible situations that I've talked about, and I hope that these will help individuals trying to establish or even incorporate technical analysis based views into their trading. It is a very important risk tool, and by having tight stops based on TA, or not tight stops, more so realistic stops based on TA and realistic limits, you're not being influenced by emotion or sentiment to the extent that the majority of newbie and even semi-professional traders are. And to conclude, that has been another edition of the Chart Pack series. This is episode 9+. I've been your host, Ryan Kia. It's about time I head off to grab another super malt, and I hope this has been helpful. We've released quite a few, in fact, on both days of our launch. We've released back-to-back days of bonus podcasts and bonus content. In fact, we've got another article out on the site incorporating a lot of technical analysis, and I'm almost certain that it will be of value. But nevertheless, that concludes today's episode. If you haven't already, you probably have been over to the site to view this episode and get this far, but head on over to the site, quantiumresearch.co.uk. You can access today's article, which hasn't been mentioned to the public, so you can get ahead and have access to it first, and maybe get some valuable ideas on the back of it to incorporate into technical analysis. It's been a pleasure. Until next time.